Have you ever had a problem at the bank either getting a business loan, an individual loan? You have to wait online, you're waiting on a car line, there's no money in the ATM machine, or the ATM machine isn't working at any particular point in time? Well, guess what? I got my partner with me, Eddie Gartner. He's a genius in the space of understand how to create your own banking systems and strategies. What's up, Ed?
Rob, how's it going?
How you doing, man?
Man, you know, what I hate about the banks is you give them your money and it sits there earning next to nothing. And when you want to take money out, what are they going to do? They're going to charge you interest for loans, right? So I'm going to talk about today a way that you can take control of your money and start earning interest on loans that you give yourself. So look, today we're going to talk about becoming your own bank. And what do I mean by that, right? It's not talking about opening up a bank itself. What we're talking about is using a vehicle and funding money into it, and then being able to leverage that money out to create arbitrage and to actually gain interest on money that you're taking out, really taking control and having control of your money and your assets at all times, much like the banks do. So who is this for? Really, we're looking at people usually 25 to 65. Could you be younger? Yeah, you could probably be as young as 18 to get one started, but you need to have some savings, right? So generally you'd consider having about 10,000 to get one started. So from 25 years old, you probably have 10,000 that you have sitting in a bank right now earning next to nothing, right? So you can take that and start to put that to use in one of these policies. And then, you have the mindset that you want to build wealth, right? This isn't for somebody that's just looking to work their 9 to 5, go home, kind of relax. They want to build wealth, they want to grow, they have an entrepreneurial mindset. So the first step is we have to create a life insurance policy, and stay with me, right? This is not your typical term insurance. It's not the same thing that you get through work, right? This is a specific type of policy, and we're using whole life insurance, right? So step one is to get a whole life insurance policy. That entails going through a medical qualification, right? You have to fill out some questions. Maybe somebody comes to your house and does an exam. And that's how we begin to set this policy up. So step two, right, is we're actually going to design the policy, right? So if you think about a whole life insurance policy, and maybe you've seen them, maybe you haven't, maybe you're like, look, somebody showed me a whole life policy and it takes like years to get the cash value in them. That's not what we're talking about here, right? We're talking about designing a policy that has paid up additions, and paid up additions that are overfunded, right? We're putting more money into this policy than's necessary for the death benefit, but to not violate MEC rules, right? And what's a MEC? That's a modified endowment contract. And why is that important to you? We want to make sure that your policy never becomes a MEC, because we want to keep all the tax benefits of this life insurance policy. So the way that we do that is we also add on term insurance riders, and those term insurance riders allow us to increase the death benefit for a minimal cost, and allows us to put so much more money into the cash value of that policy. So in the simplest terms, what I mean, right, a paid up addition, it sounds kind of funky, and term riders and all this stuff. What we want to do is put the least amount into the monthly premium of the policy, but take all the extra, those paid up additions, and build that cash value. And that's what we're doing. So we're putting the least amount into the base of the policy, and the most that we can into the cash value to have immediate access for you. So that brings us to step three, right? And step three, we need to properly fund this policy, right? So all those pieces that we were talking about, building out the whole life and starting the whole life, now we need to fund it, right? And so what we want to do is we want to pay as much as we can into this policy, right? So that we have a lot of cash value available. But we want to do it in a way that 80 to 85%, right, give or take, is going into that cash value immediately. And only a smaller portion is actually going to what purchases the death benefit, whether that be the term insurance rider or the base death benefit that comes with the policy. So in step 4, this is where the fun part is, right? This is where you actually start to become your own bank. And so here's what it looks like, right? You're going to take that cash value and you're going to leverage it from the policy. So a lot of people will talk about borrowing money out of the cash value and then paying themselves back interest. That's actually not what happens, right? What actually happens is you're taking a loan from your policy, right? You're leveraging against that available cash value. And in turn, what happens is that because that money never leaves the policy, it actually has continual compounding interest. And having that continual compounding interest is where the magic happens, right? Because the cash values will continue to grow in this policy. And generally, when we're taking money out of the policy, you're going to be borrowing at a lesser rate than the money is growing. So you're actually earning money on those funds, even though you have them leveraged out into another, investment. Step 5 here. Now we got to talk about, we've taken a loan out. How do we pay it back? Well, if you think about a traditional loan, right, what would happen? You would get a monthly bill that, you're paying a certain amount towards interest and a certain amount towards principal. Well, when you do this through a life insurance contract, you actually set up your own amortization schedule. What's that mean? Well, let's think about, do I do an investment where I'm a house flipper, right? And now I'm flipping properties. And what's one of the biggest challenges with flipping properties? Carrying cost of those mortgages. Well, what if you didn't have to pay that back right away? And what if you could wait until that property was sold? Well, if you're taking money from your life insurance policy, you actually get to set that up. You set the terms of how and when and how much you actually pay back into that policy. So why does this work, right? So let's think about, the first thing that happens is your cash value continues to grow, and it grows at a much better rate than anything right now offered by banks or really anywhere. It's not that high yield of 0.4% or some of these crazy numbers that these banks expect to entice you with, right? You have guaranteed growth rates that are set by state law and contract. The second part, or the second reason why this works, is that the growth that's inside of that policy isn't taxed. And because you're taking it out in the form of a loan, you pay no tax on distribution, right? So as long as you're maintaining some of that death benefit there and that policy remains a life insurance contract, none of that money that's taken out is ever taxed. And look, the third reason it works is because of that continual compounding growth. No matter how much money you take out of the contract, even if you took the full cash value that you have, it continues to compound and grow regardless of the money being there. So here's the thing. Some of this might get a little over your head, right? Some of it, seems a little high, and there's a lot of terms that get lost on people. What is happening is you're taking your money, you're earning interest, even though you have it leveraged out and you borrowed it and put it into another investment, right? And the key to this, right, is that you're controlling your money, you're controlling the interest, and you're earning interest on stuff that you otherwise would have paid interest to a bank.
Hey, listen, thank you for checking out the video. And if you really, truly want to be able to become your own bank and check out exactly how we show people the success process of being able to tap in not only the Epic Wealth Builder, but identify exactly what the action steps are in order to be able to open up that bank, go ahead and click that link below, and one of the members will reach out and take you through that process. And thank you so much for watching. Don't forget to hit the subscribe button, ring that bell, and check out this video over here. All the content that we're bringing every single day is meant to serve you and really give you the ability. All right, let me start over.
Okay.
You want me looking at the camera or looking at Rob? Okay.
And then you turn your chest a little bit toward
Yeah.
And then
Flare it out.
Put your chest in his mouth.